Today is Tuesday, February 13th of 2024. We did several trades in our two accounts here. Above the blue line, you see the one trade we did in our small option trading account. We bought to close the CAG February 16th $28 cover call and just rolled it out to March 15th and sold that same $28 strike price. Got a credit of 35 cents per share. And also notice down here in our large account, I'll go ahead and talk about the CAG trade we did in this account. So this account, we did something different. We're not in a covered call because we get paid nice interest on our cash in this larger account, whereas we don't in our smaller account. So in this larger account, we really prefer to do cash or put options right now, and because we get to collect that interest as well as the option premium. So in this one, what we did is we adjusted our cash or put option. We bought to close the February 16th $28 cash or put options and rolled it down, but had to roll it out all the way to June. Rolled it down to $27, so you dropped it by $1 and still pocketed a little over 35 cents per share. So now let's take a look at our charts here. So first of all, we'll start here on our bottom left chart, our daily chart of CAG. And notice that with it breaking through this area right here, that $28 area that had served as support for multiple times, just even this year, and resistance before that, which turned into support, since it broke through the 3 days ago, I decided on that cash or put option to go ahead and roll it down as we rolled it out. So we got it down to 27. So percentage-wise, a pretty good drop there of $1 when you're looking at a $28 stock. And then with our covered call, because we went in it around that $28 mark, we went ahead and just sold that same $28 strike price. So able to pocket nice premium on both of them. And we do have to go out to June on the one cash or put option. And we do have a little bit of room to add to this, but we might be able to add one more in our larger account, but that will be all, unless we're going to repair it later. Now notice here on our weekly chart that the action here, going back in the fall, we see CAG appeared to find a bottom back here in October around that $25 area, and then advanced and found resistance against the green 50 moving average. So now the question is, how far will it come down? Will it come all the way back down to this $25 area? If it does, then it's definitely a stock that I'll be accumulating in my 10% account, but we'll see what happens. So we were able to roll our options there and got paid some nice premium. All right, now moving on to our larger account now, the OZK trade. We sold to open the March 15th, $37.50 put options and got 67 cents per share for that. So Bank OZK is one we've been trading in for quite a while now. And we see that, I'm going to shift your focus over here to the weekly chart, the bottom right chart here. And I'm actually going to make it just a little bit bigger here for you so you can see it. Trying to even out a little bit. So we see overall it's been a nice uptrend going back to May of 2023. So not quite a year. We're still about 3 months shy of a year on this reversal. See that it had made a lower low before that, but now zooming back in here, we see it's a nice uptrend. And based on this, it wouldn't surprise me at all if Bank OZK ended up coming down to right around our $37.50 strike price area, because that's where the support line is on this upward sloping trading channel. But right now, for the past couple weeks, say it's 2.5 weeks, we're about halfway through this week, been finding support just above this red 200 moving average. So we'll continue what we'll see. We do see a couple weeks ago was a very high volume, higher than average over the past several months. Last week was about average, and we see that sellers sold it down, but buyers bought it back up, and too early in this week to judge what will happen this week. With the big gap down today from where it closed out, we have a nice gap down, and again, it finding support right there around that area where it found support about a week ago, around that $40 area. I decided to go ahead and sell a new cash or put option. Actually, since we sold the $37.50 strike price, we see Bank OZK can decline over 10% before we're challenged. And Bank OZK is not scheduled to announce earnings until April 18th. So a position I like, a bank I like, and we can add this position if given the opportunity. Our next trade is our position that we had in SPX, and we rolled our naked call options. Already we got those rolled out, but this time we closed out the position we had where we owned, so we closed this out. So we sold, let me get my wording right here, we sold to close the SPX February 29th $5,005 call option, and then we bought to close 2 of the SPX 540 calls and sold to close the February 29th $5,100 call option and walked with a credit of 35 cents. We entered this position for a credit, and now we closed it out for a credit. And let me show you briefly why I did that. Now we did that position because SPX, our naked calls, had gone against us. So now with SPX showing a little bit of weakness today, it is still in a very strong uptrend, but we had a gap down today. But notice where the high was yesterday. Notice that high was right at $5,048. So those two 540 call options we sold were actually in the money by $8. So because of that, if this were to end up above 51.50, we could be looking at a loss in this position. To avoid that, since we've got our naked call options rolled up and out, I just had to go ahead and close this out. Got a little bit of profit, so happy to do that. And don't know that I'll do another trade like that again. It was really just a situational trade, but we'll always look for new trades to condors and iron condors and ways we can put the odds of winning in our favor. I already talked about this CAG trade, so that one's done. So that's all of our trades for today. We'll be looking for new opportunities tomorrow and kind of looking to see what happens with the S&P 500. It definitely has some room to come down. I'll switch over here to our week. Well, let me stick with the daily chart. If you look at this uptrend, you see I have the line drawn here, and there's a lot of lines here, and I apologize about that, but we have the upward sloping trend line, the support line here, and if that is where it's going to find support, if it continues to decline, then it'll decline about another 1.5%. Now, if it comes down to where the green 50 moving average is on the daily chart, that put it about 3.5%. So definitely some room for it to come down. As I've been mentioning in some of my videos, I believe the S&P 500 is pretty overvalued right now. Even with the decline today, it's still really overvalued in my opinion. Of course, as I mentioned to you though, market can stay irrational longer than a trader can stay solvent. You might be totally right in your estimation that the market is overpriced, but if the market disagrees with you and you're over leveraged, they can literally put you out of business. So just although things are overpriced right now, especially when you look at the overall S&P 500, just keep in mind that the market may not agree with you. So you want to position yourself to be able to win and play this game long term. So that's all for today. I hope you have a great evening.